Students, today we are going to learn the calculation of taxable house rent allowance. In short, we can call it as HRA under the Income Tax Act 1961. As per Income Tax Act 1961, for HRA purpose, there are three type of situation. One, case number one, an employee received HRA and staying in his own house or in his parental house. What he received as house rent allowance is fully taxable. That is situation 1, case 1. In situation 2, an employee received HRA at the same time he is staying in rental house but not paying the rent. The house rent allowance is fully taxable. So in first case and second case, HRA received fully taxable. In third case, an employee received house rent allowance at the same time he is residing in rental house and paying rent. He can avail exemption of house rent allowance under section 10 subsection 13A of the Income Tax Act 1961. The least of the following will be allowed as deduction. 1. HRA actually received, or 2. 50% or 40% of salary. If he is residing in Chennai, Mumbai, Delhi, Kolkata, 50% of salary will be taken. Or in any other place, 40% of the salary will be taken. In this case, salary means basic pay plus DA forming part of salary plus commission fixed percentage given on turnover. So first one, HRA actually received, or 50% or 40% of salary, or in case excess rent paid over the 10% of salary, which means rent paid minus 10% of salary. Salary means already I taught you basic pay plus DA forming part of salary plus commission fixed percentage given on turnover. Yes. Now I am going to solve one problem which is complicated. In this problem, there is no uniformity in basic pay and DA. There is no uniformity in HRA, house rent allowance received. Then there is no uniformity in the place of stay. Yes, now I am going to solve. In this case, we have to calculate taxable HRA monthly wise on the basis of month. Yes. Students, now we will solve one problem in relation to calculation of taxable house rent allowance. Yes, look at the board. We employed with the Happiness Solution Limited, and during the previous year 2020-21, he had the basic pay of 75,000 per month. He was given an annual increment in his salary of 20% of basic pay effective February 21. Yes. He also received during the year a Dearness allowance of 100% of basic pay, 50% of forming part of salary. The company also gave him a HRA of 30,000 per month, which was increased to 35,000 per month. Effective January 2021. He stayed in parental home in Ahmedabad for April and May 2020. Post, he took up a rental accommodation at Surat at a monthly rent of 26,000 per month. Effective November 2020, took up an accommodation at Mumbai at a monthly rent of 36,000 per month. You are required to compute house rent allowance exempt from tax and gross salary for the year 2021 and 22. In this problem, there is a change in basic pay. There is change in DA. There is a change in place of stay. There is a change in HRA received. There is a change in rent paid. So we have to calculate HRA on the basis of month. Yes, we have to calculate HRA on the basis of month. So for every month we have to calculate HRA. So if there is uniformity in basic pay, DA, place of stay and rent paid, we will calculate yearly wise. But here we have to calculate on monthly wise, because there is a change in basic pay, DA, HRA received, place of stay and rent paid. But in this case, there are many changes during the previous year. So we have to calculate on the basis of month. So now I recorded April, May, June, July, August till March. Our previous year starts on April 1st, will end on 31st March of every year. First we have to calculate salary for HRA calculation. Basic pay. Basic pay he received at 75,000 till January end. Till January he got 75,000. In February he got an increment of 20%. So April to January he got 75,000. February onwards he got 20% increment. So 75,000 into 20%, 15,000. So 75,000 plus 15,000. In February he got 90,000 as basic pay. In March also he got 90%. Then Dearness allowance. So the total Dearness allowance is 100% of basic pay. But for the salary for HRA calculation, we will take Dearness allowance forming part of salary. The forming part of salary is 50% of the DA. Okay, the 50% of the DA. So DA forming part is 50% of basic pay. So in April 75,000 into 50% we will get 37,500 till January. February what happened? Basic pay changes. So DA also changes. So for the purpose of calculation of salary for HRA calculation, we'll take basic pay plus DA forming part of salary plus commission fixed on turnover. But in this question, commission is not given. So we calculated salary for HRA calculation. We have to add basic pay and DA. Then place of stay. In April and May, you stay in parental home. June to October in Surat. From November onwards, he stayed in Mumbai. Then HRA received April to December. HRA received 30,000 per month. January onwards 35,000 per month. Then rent paid. When he stayed in Surat, he paid 26,000 as rent paid. In Mumbai, he paid 36,000 per month. He paid 36,000 per month as rent. Now we have to calculate HRA taxable monthly wise. In April and May, he stayed in parental home. So HRA stayed in parental home or in his own house, fully taxable. So in April month and May month, what he received, 30,000 plus 30,000, totally 60,000 he received, fully taxable. He cannot avail HRA exemption. Then now we have to calculate HRA for June to October. June to October, his place of stay is in Surat. In place of stay is Surat. During this period, no change in basic pay, DA, and HRA received and rent paid. So now we have to calculate HRA for the month of June to October. So HRA calculation June to October. June to October month wise there are 5 months. For each month we have to calculate. Okay. The least of the following will be exempted. The least of the following. The least of the following will be. The least of the following will be exempted. A. HRA received. HRA received. When he was in Surat, he received HRA of 30,000. Or B. He stayed in Surat, so we will take 40% of salary. Each month salary for HRA is 1,12,500. So 1,12,500 multiplied by 40%. 1,12,500 multiplied by 40%. So 40% of salary is 45,000. Then the third one is in case excess rent paid over the 10% of excess rent paid over the 10% of salary, which means rent paid minus 10% of salary. So when he was in Surat, he paid monthly rent of 26,000 minus 10% of salary. Salary 1,12,500, 10% is 11,250. So 26,000 minus 11,250, 14,750. Of these, which is least, which is lower, 14,750. So the taxable HRA. taxable HRA value is HRA received minus least of these three, 14,750. So 30,000 minus 14,750. So for this period, June to October, monthly 15,250 is taxable. Monthly. So for 5-month taxable value is 15,250 multiplied by 5. You will get 5-month taxable HRA. Then we have to calculate HRA for October and November. We have to calculate, November and December. We calculated till April and May. From April and May, he stayed in parental home, fully taxable. June to October, he stayed in Surat. That we calculated. Then we have to calculate HRA for November to December. November to December. November to December. For that, the list of the following: A. HRA received. HRA received. How much HRA received in the month of October and December monthly? 30,000. Or B. Stayed in Mumbai. He stayed in Mumbai. So we'll take 50% of salary. In case of Chennai, Mumbai, Delhi, Kolkata, we'll take 50% of salary. From November to December, salary is 1,12,500. So 1,12,500 multiplied by 50%, we'll get 56,250. Then third one is rent paid minus 10% of salary. When he was in Mumbai, he paid a monthly rent of 36,000. Monthly rent of 36,000 minus 10% of salary. In November, the salary for HRA 1,12,000, on which 10% is 11,250. So 36,000 minus 10% of the salary, balance 24,750. So the list is 24,750. Now we will find taxable HRA for 2 months. Taxable HRA for November and December individually, monthly wise. Actually received 30,000. Actually received 30,000. The list of the 24,000. So taxable HRA is 30,000 minus the least of these three. Least is 24,750. So 30,000 minus 24,750. So the taxable HRA is 5,250 for the month of November and December. Then we have to calculate taxable HRA for the month of January. We have to calculate taxable HRA for the month of January. A. HRA received. In the month of January, HRA received is 35,000. B. He accommodated in Mumbai, so we'll take 50% of salary of HRA. So January salary 1,12,500. 50% is 56,250. Then C. Rent paid minus 10% of salary. In the month of January, he paid rent 36,000 minus 10% of salary. So January month salary 1,12,500. 10% is 11,250. So 36,000 minus 11,250. 24,750. Now we will calculate taxable HRA. Taxable HRA. How we can calculate? HRA received 35,000. The least of these three is 24,750. That is exemption is 24,750. So 35,000 minus 24,750. The taxable value of HRA for the month of January is 10,250. This is for 1 month. Then we have to calculate HRA for the month of February and March. February to March. HRA received February. How much HRA received? 35,000. Or B, 50% of salary. 50% of salary. Salary in the month of February is 1,35,000. So 1,35,000 multiplied by 50%, 67,500. See, rent paid minus 10% of salary. In the month of February and March, the rent paid is 36,000. 10% of salary. Salary is 1,35,000, on which 10% is 13,500. So 36,000 minus 13,500. So excess rent paid over the 10% of salary is 22,500. The least is 22,500. So taxable HRA is taxable HRA. HRA received how much? 35,000. The least of these three, 22,500. So the taxable HRA 35,000 minus 22,500, 12,500. So first 2 months HRA received fully taxable. June to October we calculated here. Each month the taxable is 15,250. For November and December each month 5,250 taxable. January month the taxable HRA 10,250. February and March each month 12,500 is taxable. Okay, now we calculated the taxable HRA. HRA taxable in the month of April and May fully taxable because accommodated in parental home. Then June to October taxable value 15,250. 15,250. June to October 15,250. November and December taxable value of HRA 5,250, 5,250. In January taxable value is 10,250. February and March taxable value 12,500, 12,500. Now we have to calculate gross salary. Basic pay for 10 months he got 75,000. Subsequent 2 months he got 90,000. So basic pay 75,000 into 10 plus 90,000 into 2. So here 7,50,000, here 1,80,000. So the total basic pay 7,50,000 plus 1,80,000, 9,30,000. Then Dearness allowance, forming and not forming part of salary. 100% of basic pay. 100% of basic pay, how much? 9,30,000. Then HRA received. April to December 30,000 HRA per month. So April, May, June, July, August, September, October, November, December. 9 months he received 30,000 per month. So 30,000 into 9. For subsequent 3 months 35,000. So 2,70,000 plus 1,05,000. So total HRA received 2,70,000 plus 1,05,000. 3,75,000. minus exemption minus exemption. HRA taxable for the month of June to October 15,250. How many month? 5 month. So 15,250 multiplied by 5. 15,250 multiplied by 5. So the total taxable HRA for 5 month 76,250. Then November, December, each month taxable is 5,250. So 2 month 10,500. So for June to October, total HRA taxable 76,250. For November and December, total 10,500 taxable. January 1 month, so 10,250. February and March, total taxable is 12,500 into 2. How much? 25,000. April, May, he accommodated in parental home, so total taxable value 60,000. Then June to October taxable HRA 76,250. 60,000 plus 76,250. And November to December 10,500 taxable HRA. January 10,250. Then February to March taxable HRA 25,000. So the total taxable HRA is 1,82,000. Total taxable. How we got? In April and May accommodated in parental home fully taxable. So 30, 30, 60. June to October 76,250. November to December 10,500. January 10,250. February to March 25,000. So total taxable 1,82,000. 1,82,000. 1,82,000. So the difference between HRA received and taxable HRA will get exempted. Will get exempted HRA under section 1013A. Now we'll get gross salary. Now we'll get gross salary. Value 9,30,000, that is basic pay. 9,30,000, that is DA. 1,82,000, that is HRA taxable. So the total gross salary 20,42,000. Students, we completed calculation of HRA. In next class we'll solve different problem. Till then, bye and thank you.